Good morning, Southwest Florida. You're listening to Saving the Investor radio show. I am Alfie Townsend, Southwest Florida certified financial planner professional. I'm here with Pastor John Antonucci, and we're going to talk about the market, what happened this week, and what we feel is going to be happening really this election year. So stay tuned. And welcome to the show.
Yeah, great to be here. Great to be in studio with you. And good morning, Southwest Florida. You know, on today's show, we're going to be discussing finding opportunities in turbulent times, our nation's growing debt problem and its effect on your financial future and tax rates, and the truth about market timing. But as always, Alfie has made available his toolkit. So if these economic uncertainties have put your financial decisions on hold, maybe you're on the sidelines, maybe you're waiting for something to happen, you really need to grab a hold of Alfie's free toolkit to help transform your worries of retirement into confidence. You know, inside Alfie's toolkit, you're going to find a wide range of materials, such as will your money last as long as you do? If you don't know the answer to that, you need to pick up the phone and get this right now. Are you paying too much in taxes in retirement? The Social Security Decisions Guide. And will a recession rob your retirement? To get this total free toolkit, all you have to do is pick up the phone, call the operator, or text the word KIT, K-I-T, to 239-747-1077. That's KIT, K-I-T, to 239-747-1077. You know, it's time for a worry-free retirement. Get Alfie's toolkit today. Call the operator or text the word KIT to 239-747-1077. And always, Alfie, we're going to begin the program with a market update and then dive into these crucial topics that can shape our listeners' financial future. What's going on in the markets? What's driving the markets this week? We've had a turbulent week.
Yeah, we have.
Why is that?
Well, we do have consumer, confidence did rebound a little bit from last few months. It's been hanging at that 97.5 on the Richter scale, but the prior month, that's what it was prior month, and this month went up to 102. So it's the first time it had an increase in the last 3 months. So that's a good thing. You know, we do have a little bit consumer. Now, with the market, the way it's been acting this so far this week, we'll see how that, that consumer confidence, if that's going to, stay at the over 100 or go below like it's been. And, again, you have to talk about inflation. Inflation, if you're not taking that in consideration inside your portfolio, you need to really consider that because things are so expensive. The grocery stores are expensive. Gas is up. Eggs are up. Chicken's up. Beef is up. Everything is up.
Yeah.
So it's just a matter of, is your portfolio keeping up with inflation? That's something that we're going to talk a little bit about this year, in this show. But one of the other things we want to really talk about, what's lagging in this market, is the Dow Jones. You got the Dow Jones is really only up less than 2% for the year.
And that's solid dividend companies, isn't it?
That's solid dividend companies, but the S&P has gained about 4.5%. Nasdaq's up 8%. But the thing about it is this: if you look at what the S&P has done over the last couple weeks versus what the Dow has done over the last couple weeks, it's about a 7% difference. So there's something lagging big time in the Dow Jones. That's why we don't usually use them as a barometer. We're going to use the S&P because the S&P is 500 companies, where the Dow Jones is only 30 companies. So it's a lot smaller of an index, even though they're large companies. The S&P is a broader market to really set it.
Well, let's talk about the NASDAQ, because obviously that's tech stocks, and that's up the most at 8%. What are your thoughts? Because I remember back years ago, I don't know what year it was, but tech was really exploding, and then the tech stocks sort of busted. I mean, do you see that in the horizon, or do you see companies like NVIDIA really stabilizing that sector?
Yeah, that's a good point, John. The tech stock, when they went down big time in the 99, 2000, that was at the beginning of really tech.
Right.
So there was a lot of companies that were so overvalued. They weren't making any money. They didn't have product. They had like
apps were just coming out.
Yeah, they were just, things were just starting. So I don't think we're in that situation, I think it's going to be, yeah, are we going to have volatility? Yeah, we have volatility, but to have a big crash like that, like the Nasdaq did, no, I don't see that, because companies have value now, and the valuations are a whole lot better than what they were back at that time. I did want to say in May, since 2009, the S&P has had the best rally of increase at 5.3 since 2009. So this month has been the best going back of the S&P all the way to 2009. So we're talking over a decade of data there. That over a data of great rally. There's something else I want to talk about. I want John to give our phone number and really what we do here at the Advanced Retirement Group. We help people get to and through retirement. So if you are concerned about the plan that you currently have, or if you need a checkup, John's going to give you a great opportunity right now.
Yeah, Alfie has put together what's called a retirement simulator process. It's a proprietary program, and it really is a deep dive into your current portfolio to see what's really going on. Alfie will take you back 5 years and put his portfolio side by side with yours, and you'll be able to compare really on a big screen exactly how his portfolio would have compared over those 5 years to what you actually did get in your returns. He's also going to be able to expose all the hidden fees inside that portfolio. He's going to make sure that you're allocated properly, that you're diversified correctly, that you're rebalancing on time, that you're not taking undue risk for the amount of return that you're getting. You owe it to yourself, especially as we move into the midpoint of 2024, to be able to look at your portfolio and get a review. If you haven't had a review in about a year, this is the time to do it. Meet with Alfie in Fort Myers or Naples. All you have to do is call the operator, tell him I want to take advantage of that retirement simulator process, or text the word VISIT, VISIT, to 239-747-1077. You owe it to yourself. Alfie has over 40 years experience as a certified professional, financial planner professional, and he's a fiduciary, which means his responsibility is to you. So if you're on the right path, if you're on the right course, he's going to tell you, great job, keep doing what you're doing. But if there's changes that need to be made, he's going to give you some opportunities that you may not have heard of before, because he has so many incredible opportunities that you could take advantage of. Give him a call right now, 239-747-1077, or text the word VISIT, VISIT, to 239-747-1077, and get that retirement simulator process today.
Yeah, and it's worth to get, John. You do get a lot of information out of it. It's, if you never really had anything like that, to really give a checkup of your retirement plan. So it's a good opportunity. Now, I wanted to talk about, I'm going to get these notes. I want to look at these notes in particular, because I was reviewing, doing the show this morning, and the S&P, like I said, had the best month, since 2009. But the thing about, there was something about 9 days. So this year's best returns came from 9 days of trading. So 9 days since May, of these trading days have created these returns for the S&P 500. So market timing, just think, with market timing, if you weren't in the market these 9 days, you would not be most likely up. You would have been down if you're trying to time the market, get in and out. That's why when you think about the market, you have your portfolio. If you're one of those people that get in and get out and want to time the market, you got to be right so many different times to be in and out, in and out, in and out. You want to have a balanced portfolio that gets rebalanced, that has good companies in there, and that is really being looked at by professionals versus trying to get in and out of the market. So this, that 9-day return of these returns came from 9 days in the market this whole year. So
yeah, that's why you got to be in it, right? People that keep pulling out are really doing themselves an injustice, aren't they?
Absolutely, it is. And so if you're one of those people, I hope you're listening to what we're saying and take our advice. Stay in for the long haul, rebalance, and you're going to be just fine. You're listening to Saving the Investor. I'm Alfie Townsend. Southwest Florida certified financial planner professional. We have a whole lot more. We'll be right back.
Welcome back to Saving the Investor with certified financial planner professional Alfie Townsend. On today's show, we're going to be talking about finding opportunities in turbulent times. We're going to talk about our nation's growing debt problem and its effect on your future tax rates, and of course, the truth about market timing. You know, Alfie's book was in high demand last week because Alfie doesn't market time, stock pick, or track record invest. And due to popular demand, Alfie is offering it again. A complimentary copy of his book awaits you. It's called Making Waves in Retirement, and we'll answer a lot of the questions that are on your mind, many of the things that are keeping you up at night. He's going to give you answers to, and really, knowledge is information that really can give you wisdom and a strategy to get you to and through retirement. To claim your complimentary book, all you have to do is call the operator or text the word book, B-O-O-K, to 239-747-1077. Alfie's book is your guide to a fulfilling retirement. You don't want to miss out on the valuable insights, including many, many stories about investors that he has helped save over the years. That's why he names this broadcast Saving the Investor, because he wants to save you from the pitfalls, the schemes, the traps of Wall Street. Get your book now. It's absolutely free, Making Waves in Retirement. Text or call the operator. Text the word book, B-O-O-K, to 239-747-1077. And Alfie, a lot of people want to be in long-term bonds. You know, what are your thoughts on bonds? Are they a part of your portfolio? And when they rise and they drop, I mean, that's something, do people get in and out of those, or is that something they stay the course like the market?
You know, a balanced portfolio, John, is going to have, bonds in there. It's going to have, different quality rated bonds also, and terms. Are they intermediate, long-term, short-term? We tend to like the short-term bonds. They're not going to get hurt as bad with interest rates. Now, as interest rates start to go down in the future, bonds will start to rebound. So that's going to be a good thing. So bonds will appreciate more. But right now, they're taking a hit. We use different alternatives than bonds. So there are things out there if you're looking to have protection and looking to have something that's not correlated to the market. There are some things out there that we would do and we look at for our clients in their portfolios. We would really look at what you have and find out what that risk number is and put the appropriate allocations to work for you. One of the companies that really has brought down the Dow a lot this year is United Healthcare. United Healthcare is one of the biggest insurers, and they are, in the healthcare industry, obviously. But they brought in one day, last week, it was 5% down in one day.
That's crazy.
Yeah, 5%, and that drug the Dow Jones down 350 points at one stock. That's why I'm saying if you have only 30 stocks, and you have one bad stock, can bring the whole Dow down, and you could have other things that made money that day, but that indicator right there is a nasty indicator. And for the year, it's down 8% of their peak in May 17th. So and who do they compete with? It's CVS, Humana. So when you have these healthcare, I mean, if you think about healthcare right now, it's in disarray. It really is. I mean, I think the insurance industry, between what they did on property and casualty insurance for this, the hurricane that we had a couple years ago, for Ian, people that didn't get paid, and
they're all pulling out. I mean, I know, Farmers is my company; they're pulling out. You got, Allstate have pulled out. All these companies, they're not making money here. What do they need to be here? And that hurts us.
They don't need to be here, but it does. It drives our prices up. So, but again, United Healthcare is really what drove the Dow down big time this past week. Other factors are, you have Home Depot, Visa, McDonald's. They're really dragging the average down too. If you go to, I went to Chick-fil-A. Love Chick-fil-A.
Yeah.
But I was looking at it, and I had the meal deal with a chicken wrap.
Yeah, it's like $10, $12.
$12.50.
Yeah.
It's like,
Wait till we eat at Barbatella tomorrow night.
Yeah. Barbatella, that's a great Italian restaurant over in Naples. Fantastic. If you haven't haven't been there, it's one you want to try out. We have some great Italian restaurants here too.
Yeah, we do.
Osteria Celli
Yeah.
and El Pomodoro. My
Yeah.
friend Randy over
Oh, they're
there.
great.
Yeah, and then of course we have Chibo's,
Yeah.
and then there's a new one,
Yeah, we have to try that.
Bellini's,
Yeah, that's
that
by
just
you.
opened up. So we'll try Bellini's, and they have valet parking over there, and it does smell good.
Yeah.
We'll see.
Yeah.
We'll see.
Yeah. Well, talking about food for thought is something that you want to position yourself, especially as the uncertainty of this year, an election year, and how taxes are going to play out in your financial future. If the Democrats win, the taxes that you're enjoying at a low tax base is going to expire, and you don't want to be caught with a ticking time bomb. You want to be prepared for that, so you need a plan that addresses uncertainties and instills confidence in your future. And as a certified financial planner professional, Alfie has put together a tax roadmap that strives to help you achieve 3 goals. Number 1, lower your tax bracket. That's what he wants to help you do. 2, protect your money when taxes rise. And 3, create tax-free income. You want to get a hold of this complimentary tax map because it is your guide to a fulfilling retirement. Be one of the first callers right now. Pick up the phone and either text the word TAX, T-A-X, or call the operator 239-747-1077. That's 239-747-1077. Stop what you're doing right now. Don't wait to the end of the broadcast. Text the word tax to 239-747-1077. It'll take you to a landing page, and you'll be able to get this information complimentary. It's Alfie's tax map that he has put together so that you can avoid the ticking time bomb. And Alfie, we're pretty close to this election. I think it's 150 days away, somewhere there. And taxes could actually be going up if a Republican doesn't win the House, and that's Trump.
Yeah, we gotta win the House. We got to win the White House, the House, the Senate, for this to change, and we need change, big change. This is a true change because what's been happening the last 3.5 years cannot continue to happen, or we're not going to have a country.
Right.
When, no telling the amount of people that are in that should not be in this country right now, and what's going to happen. We have no idea what's going to happen, but it's not pretty. So I always say, if you don't know what's going to happen and there's a lot of uncertainty in there, you have to have a portfolio that has some protection, downside protection. And if you don't have any, if you're not using, like our structured notes have, they're paying about 8%, but they have a 30% downside protection of the S&P or NASDAQ. So when you're talking about getting 8% income, that's a pretty darn good income. If you're not needing the income, it could just roll right over into your IRA again and just be tax-free. You're not a taxable event because you're rolling it back into your IRA. But if you're needing income, this is a great way to get that 8%. It gets deposited right in your check account each and every month. So these are some of the strategies that we use. We'll use that. We're going to look at portfolios that are being rebalanced, portfolios that are using individual stocks. A lot of people, they have mutual funds. They're paying, a percent just on the fund fees that they don't even know about. So we'll show you what your fees are. When we do that retirement simulator, we will show you what those fees are. We'll show you what you're holding. We're going to show you what's going on inside your portfolio, and we're going to show you our income plan that we would put together for you. When it comes to retirement, this is the time you have to really take your hard-earned money and create income from it in a volatile time right now. We got the election going on. You have the economy is it's chugging along, but why does people feel so negative about it? Because inflation, and they're not listening to it. When you go to the grocery store, you feel it. When you go to the gas station, you feel it. When you go to a restaurant, you feel it. Everything around you. If you're making good money, you're not feeling it, but the middle class is feeling it, and ones that have family are definitely feeling it.
Yeah, it's definitely something that is on your mind, and those of us in Southwest Florida, especially those of you that are retired or soon to be retired, you really need to get a plan. Alfie is ahead of the curve on a lot of these things, and he has been prepared for inflation, higher tax rates, all the challenges that you're facing as a soon-to-be retiree or retiree. And that's why you owe it to yourself to sit down with him in Fort Myers or Naples. He has two beautiful offices. And really let him put a plan together. If you don't have an income plan or a strategy, this is the time to do it. Why wait? Why put it off? You have nothing to lose and everything to gain. You're going to be talking to a man that has over 40 years experience as a certified financial planner professional, and he has products and services that you probably never heard of before, and he has connections to very, very big companies that the uber wealthy really buy into, that you can get access to that you can't get on your own. So if you're a do-it-yourselfer, you really need to sit down with him as well. Text the word VISIT, VISIT, to 239-747-1077. If you don't text, all you have to do is pick up the phone, call the operator, tell them I want to make an appointment to sit down with Alfie in his Fort Myers office or his Naples office, 239-747-1077. It'll be one of the best decisions that you made this week. Stay tuned. We're going to be right back right after this break. Don't go away.
Good morning, Southwest Florida. You're listening to Saving the Investor radio show. I am Alfie Townsend, Southwest Florida certified financial planning professional. Thank you for really joining in this broadcast. We have John Antonucci here. He is Pastor John, as everyone knows him. So, John, welcome to the show.
Yeah, great to be in studio. As always, Southwest Florida, great to be with you. And we've got a great show in store for you today. And, Alfie is the type of person that doesn't market time, stock pick, or track record invest. He really puts together a full strategy and an income plan that can get you to and through retirement. And many of you that are listening to me right now might maybe under economic uncertainties, you don't know what's going to take place and you're unsure, and you put all your financial decisions on hold. You really need to get a hold of Alfie's free toolkit that will help transform your worries of retirement into confidence. Inside Alfie's toolkit, there's a wide range of materials, such as, will your money last as long as you do? You need to answer that question. Are you paying too much in taxes in retirement? If you can reduce your tax liability, obviously that's going to put more money in your pocket each and every year. Social Security Decisions Guide, when is the most opportune time to take it? And will a recession, if we have one, rob your retirement? To get Alfie's free toolkit, simply call the operator or text the word KIT, K-I-T, to 239-747-1077. You can get that kit today absolutely free. It's time for a worry-free retirement. Get Alfie's toolkit today, 239-747-1077. And Alfie, when we talk about market timing, a lot of people believe that they have inside information. They study the Motley Fool, or they get some financial Forbes report or something, and they believe they can beat the market by timing it. But studies show over the years, and even you've seen this, that you really can't look at a crystal ball and know what the market's going to do because it's so unpredictable, right? So what would you say to those that say, I can time the market, I can buy low and sell high, which is really the secret to that, but most times people find out it just leaves them empty.
Yeah, it sounds good. It sounds like the right thing to do, buy low and sell high, but that's what you're doing when you stay in the market. You are creating a lower cost base because the market is increasing. But to get in and out of the market for something short term, you could try that. But if for long-term investing, is very, very hard to do because you have to be consistent, and that's what makes a market great, is that it's unpredictable. Earnings are going to come out. You don't know if they're going to be good, if they're going to be bad, what's going to drive that market. You just don't know. That's why and if you do know, it's probably inside information that we're not privy of, and that's not how it works. You have to stay in the market to make money in the market. You have to rebalance, and that's how you do it. But like we always talked about, John, you have to be right twice: when to sell and when to get back in, and to do that over and over and over. It's just you could have a terrorist attack, you could have just something out of the like pandemic shut the country down. You just don't know.
Right.
So that's why you cannot rely on timing the market.
And when you talk about being in the market, a lot of our listeners think, well, I own 10 different stocks, so I own the market. Really, you talk so much about allocation and diversification. They don't really own the market when they have 10 stocks.
Yeah.
You have money managers really that oversee a lot of this, and they're putting them into a wide range of different types of holdings, aren't you?
That's right. We have to, we do use a lot of SMA accounts, which are called separate managed accounts, which are individual stocks that build a portfolio. And there might be 50 to 60 stocks in there, but what's nice about that is that, like, for a couple years back, a year or so ago, we took out Target. That was in one of the stocks. We called up the manager and said, look, we're not into what Target's doing with their wokeness, so we took them out. And clients love that. And you're not able to do that in a mutual fund or ETF. You can't just call and say, hey, take that out. I don't like what Target's doing. You can't, but we can. So that's what's nice about people that have money invest this way, separate managed accounts. So we took that one out, replaced it with Costco, and it was a great thing because it made up the losses of Target from being stupid, and then it created a positive return after making up the losses, for the rest of the year, a year ago. So this is the type of things that we want to look at. We want to look at SMA accounts. We want to look at different portfolios that are for growth, different portfolios that have protection, because, you have to look at protection too, John. Some of these ETFs have like a buffer. It's called a 30% buffer, 20% buffer. So it protects the first, either 10% down, 20% down. Those are the buffers that we typically use on our structured notes. We'll use a 30% buffer, but that means you're protected. That if you stay in the accounts that much down, and then on the up, you make all the ups up until some of them are 17% to 19%. So if you're good with that, then there are things you can do to protect your money from downside volatility.
Yeah, you're listening to Saving the Investor with Certified Financial Planner Professional Alfie Townsend, 239-747-1077. We talk about track record investing. Most people want to ride the wave as it's going up, and they're chasing stocks based on past performance or the ones that are really hot.
Yeah.
Your money managers are really disciplined to buy what's going down. Why is that important to be able to take the emotion out of it and really purchase something when everyone's chasing the up? You guys are chasing the down.
Yeah. So you're right, John. It's when things go up, what happens, if you think about it, everybody wants a piece of it.
Right.
Everybody wants that stock that's going up. And, so sometimes they're buying it at a very high price. But when it's hard to buy a stock is when it goes down. And when that stock is going down, and I give the same example when we first moved back to Florida. I grew up in Florida in the 60s, 70s, and 80s and 90s. Some of 2008, we moved to Maryland for 20 years and came back in 08. But when we came back to 08, we bought a house in Town and River area, and there was so many for sale signs. That's when it was just the barrel. It was just down everywhere for sale signs. The signs were tilted. There was nothing happening. We had remodeled the house that we bought and did addition and this and that, and it was, the price was perfect to buy a house at that time and to do work on it because people weren't working. But if I had the money at the time,
you'd have bought four of them.
I should have bought a bunch of those houses, but it hurt to even think about buying them. I'm like, dang, is this ever going to come back? Is
right.
This, these are homes you could buy for $500,000 that are worth right now $2 million.
Yeah.
But that's the thing. You have to buy when it hurts. And when it comes to emotion, John, it's not a good feeling to buy something that's going down and you're thinking, gosh, is it going to keep going down, down, down? Then all of a sudden it starts going up. And so that's when you take the emotion out of investing. And our managers, like you said, they're looking at they take the emotion totally out of investing, and they're looking at the books of the company. They're looking at the PE ratios. They're looking at the cash on hand of the company. They're looking at different things that we're not looking at. So it takes that out. So that's why they're saying on an average, it's when you're using an advisor, the advisor's fee are typically taken care of by the mistakes that you're not making.
Right.
If they're a good advisor, I count myself as a good advisor. To be in the business for 40 years, you have to be pretty good. I'm not bragging or anything, but we get our clients to and through retirement, and that's one of the ways is to find the managers that know what they're doing, that you have confidence in, your clients have confidence in, and that's one less thing you have to worry about, because it's, when you're retired, the last thing you want to do is worry about income, where that income is going to come from, and worry about, should I get in or should I get out? Should I buy this stock? Should I sell this stock? And with us, you don't have to worry about that. It's being done for you.
Yeah, that's a beautiful thing. And he has 40 years experience as a certified financial planner professional, and he is Southwest Florida's financial planner. He's also an author, and he just came out with his second book. And a lot of the questions that you may have about retirement or investing or strategies or income planning will all be contained in his book, Making Waves in Retirement from Waypoint to Waypoint. It's always in high demand, and he does have a new, inventory of books, and he's making it available to you. It's a complimentary copy, and as I always say, if it's free, it's for me. And to claim yours, all you have to do is text the word book, B-O-O-K, to 239-747-1077. If you don't text, you can call the operator and say, I want to take advantage of Alfie's offer. His book, his complimentary copy of his new book, Making Waves in Retirement. You don't want to miss out on the valuable insights, including many stories about investors that he has helped save from the pitfalls, the schemes, the traps of Wall Street. This book is very insightful, very informative, and really it's going to give you some knowledge and information that will really take the emotion out of your strategy and out of investing. Simply text the word book, B-O-O-K, to 239-747-1077, or call the operator. Any insight on a third book maybe coming out, or are you finished writing books?
No, I did have one thought in mind, but I don't think so. There was a client that I spoke to this week, and my son Devin helped her get a car, and this was one of my Maryland clients, and so she has plenty of money, but she doesn't spend it on herself. So we encourage her. She was going to get a used car, and we insisted, no, you're going to get a new car. So we got her the car, did all the negotiating and this and that, and I just talked to her. She's had it for a month now, and I said, well, how you like your car? And she goes, I just love it, Alfie. And she goes, Alfie, I love you too. and that's why we do this business.
Yeah, that's rewarding.
That's rewarding because, we are here to get our clients, to feel confident about their retirement and to spend some money. Our job is not just to grow your money, it's to help you spend your money. And we're going to talk a little bit about what we're doing here at the Advanced Retirement Group on this next segment. You're not going to want to miss to really help you have the abundant life that you should have in retirement. We'll be right back.
Welcome back to Saving the Investor with certified financial planner professional Alfie Townsend. Great to be with you today. If economic uncertainties are putting your financial decisions on hold, you need to grab a hold of Alfie's free toolkit that will help transform your worries of retirement into confidence. It's a white paper that has, will your money last as long as you do? Are you paying too much in taxes in retirement? The Social Security Decisions Guide, and will a recession rob your retirement? All you have to do is text the word KIT, K-I-T, or call the operator to 239-747-1077. Get a hold of Alfie's toolkit today that will transform your worries of retirement into confidence. And Alfie, a lot of people that are listening to us are currently retired, some for many years. And when we talk about required minimum distributions from their accounts, a lot of people maybe are fearful of pulling money out because they're afraid maybe they're going to run out of money.
Yeah.
So they're not enjoying their best life. I mean, what would you say to them that are listening that you really don't know how long you're going to live, especially in retirement? Go ahead and enjoy that life because you've saved to enjoy it. So why don't you take advantage of it?
That's a great point. We have a lot of software, John, that we show our clients. You're going to be just fine. Markets go down, markets go up. We're going to show you that you're not going to run out of income. You're going to be just fine. Our job is not just to grow your money. Our job is to give you a retirement that you worked hard for, that you are not just going to retire to sit around. Your retirement is to really travel. If that's what you want to do, travel. If you want to see your kids, bring your kids, legacy, whatever it is. One of the new additions that we added on to our firm is Jeff Lavender, who is a travel concierge that is phenomenal. phenomenal. He's out of California. One of my good friends that is a financial advisor has been using him for years and introduced me to him, and now we're bringing him in on our firm. But what he does is a client would call him and say, Jeff, I want to do a trip that, with my, it's our anniversary or something special. It's, I want to take the kids, whatever it is, he will put that trip together for you. And it's going to be a first-class trip. It's going to be, and he sets up everything for you. And, what's nice about it, he gets paid by who he's, if he puts you in the Ritz, he gets paid by the Ritz. If he puts you on a special cruise ship, he gets paid by them. So he's going to prepare your dream trip, your fantasy trip that you could never even think of, because he's been doing it for so long. He knows the area. He knows the connections. He knows what would make your trip special. So that's just something that we added on to our firm, because we want to show our clients it's not just about growing your money. It's about growing it. It's about protecting it. It's about income. It's about travel. It's about lifestyle. And if you're just worried about your money all the time and not taking trips and not doing things, our job is to show you that you're able, and you are able to retire with confidence, and you are okay to take these trips, and you are, that will give you more quality life, that will give you something to look forward to, and there's just so many benefits to it that we're looking forward to this new addition to our company.
Yeah, and a lot of people, you're retired and you're thinking, okay, they went through the accumulation phase and they worked and now they're retired. But you put together strategies and income plans that make them money in retirement, so that even though they're taking out required minimum distributions, a lot of times, don't you find that they're making sometimes more than what they took out in a year? Why is that important, to be able to still manage the money? I mean, you don't stop managing it just because they retired.
Oh, this is the hardest part, is when you're retired, you have to start taking out, you have to replace your income that you were working with. When you were working, you had those required minimum, or you don't have required minimum distribution, but you were putting money in your plan. Now it's time to take it out, but there's ways to take it out. You could be in trouble by taking it out in a downward market. It's called reverse dollar cost averaging. So you have to have an income plan in place, and that's what I emphasize so much as a certified financial planner professional. Our job is to really look at everything that you have, and make sure that we're making the right calls for you, because, as a certified financial planner professional, we have to really be expertise on a lot of things. We have to, we're trained professionals. That means, the schooling that we had to go through, the education that we had to go through, and really the years and years of doing this. What we have to go through to be a financial planner is we have to look at taxes, we have to look at income, we have to look at different strategies, and that's what we bring to the table to our clients. And that's why we'll get clients that just sends us letters and just thank you for making our life better, thank you for helping us get, have an enjoyable retirement. So if your retirement isn't enjoyable, if you're worried about things, let us review what you have and put a plan together for you and show you maybe, you should be worried about something. If you're worried about something, you might be worried about something that is worrisome. So give us a call. John will give you the number. Come in and let us do a whole complete retirement simulator process on you. It's free. Like John says, if it's free, it's for me. But something like this is vital to make sure that you have a complete plan in place to take in consideration travel, take in consideration gifting if that's what you want to do, charitable, to give to charities, if that's, but to show you that you're able to do it is the good part about having a plan like this in place.
Yeah, you need a plan. If you don't have a plan, you're going to fail in retirement. And Alfie will put together an income plan. He has over 40 years' experience as a certified financial planner professional, and his retirement simulator process will be your guide to get you to and through retirement. It's going to take a deep dive into your current portfolio and expose all the hidden fees that are there that could be eating up your returns each and every year. He's going to make sure that you're allocated properly, that you're diversified correctly, that you're not taking undue risk for the amount of return that you're getting, and he'll put together an income plan and a strategy that will get you to and through retirement. To take advantage of his retirement simulator process, just call the operator or text the word VISIT, VISIT, to 239-747-1077. That's 239-747-1077. You could visit with him in Fort Myers or Naples. And Alfie, as we get ready to close the show, one last thing is that a lot of people might be listening and not be concerned because they may say, well, I have $1 million or I have $5 million set aside. But when we talk about taxes, somebody who has $1 million really doesn't have $1 million when they start taking that money out. That puts them in a higher tax bracket, doesn't it? And really eats up a lot of what they think they own because they don't have $1 million, do they?
They don't have $1 million. Uncle Sam is your partner. You have
what a great partner.
Yeah, what a great partner. We always want Uncle Sam to be our partner. So no, that's not a true statement there. You want to avoid, you want to create your own partners that you want. And one of the ways to do that is tax planning. So that's what we do here at the Advanced Retirement Group. We're going to look at things that can give you some tax-free money down the road and take that tax burden. With the debt that we have, we are going to be in a higher tax bracket. And as that tax bracket goes up, the more planning you do now protects all the increases that you're going to have in the future. So, things that you can do now, don't put them off. That's called the Brady rule. We always talk about the Brady rule. So if you can make some changes now to lower your taxes in the future, that's what you want to be looking at right now, because at $1 trillion every 100-day debt that we're incurring, you are going to be having higher taxes. So that's a big thing to take in consideration, is lower those taxes, have a plan in place, and enjoy your retirement plan. And again, you're listening to Saving the Investor Radio Show. I am Alfie Townsend. Love doing this show with Pastor John here. We've been doing this for well over 10 years now, 13 years or so, even longer. But, I hope you get what we get out of it, because we really enjoy looking at what happens in the week and being able to really talk about it and see if we can put you in a better position. I don't know if you ever seen our TV show called Saving the Investor. It's on every Sunday at 11 o'clock, 11 to 11:30, 30-minute show, and we talk a lot about what we're talking about here, but we can show you different things that we can't do that on the radio, and that's on NBC every Sunday. And of course, right here on 92.5, we've been on here for almost since I moved back here. So this is just a great radio show, and that we appreciate Jake doing everything he does. So until next week, everybody have a blessed weekend. Until then, be blessed.